Under the Trump administration, they actually put a lot of restrictions discouraging financial flows into China. Savers, institutions managing savings were not supposed to transfer the funds over. They've discouraged or delisted Chinese companies on U.S. equity markets. So the general sense is discouraging the flows. But the markets are driven by market forces and firms, and not often by government policies. So what's interesting to me is the increasing steady flow of money into China because interest rates there are higher. The RMB is appreciating. The economy is the only major economy that's growing. So there's a lot of money coming in. And in some sense, the two economies are more integrating rather than decoupling. When the pandemic really was in fierce spreading in the United States, let's say 6 months ago, there's a general sense that firms might move out of China, that the supply chain may be restructured. But the reality you have was that China's exports surged. It's the only major economy where exports increased a lot last year. So its share of global exports has actually increased. AmCham surveys of US firms in China show that only 1 or 2 or 3% are now thinking about moving out of China. So this concept of decoupling, the shifting of supply chains, is probably overdone. But nevertheless, there is a major issue. There will be tensions between the Biden administration and the Chinese government. They're going to have to deal with it. And I think the interesting aspect in the future is, can they focus on services as the key link? America's strength lies in services, whether it's financial services, health services, information services. It's not actually in manufacturing, but there's a tendency in the Trump administration, as it is with the Biden administration, to really talk about manufacturing jobs and to think of China as a problem. But the real issue is China is very restrictive in terms of letting in foreign investment in high value services. I think that's the area two sides need to talk about.